8:30 a.m. Mountain Time. I jump on here and just for a few minutes, we talk about the things that affect the bottom line of your business. The bottom line is also known as net income on a statement known either as the profit and loss or alternately the income statement. Big corporations like to call it an income statement. It's usually a lot longer. But in any event, there are three main components that go into your profit, and they are the gross revenue that you bring in by billing your customers or clients. And then you have the costs of making the widgets that you're selling, be that the inventory for the stuff or the cost of labor to put it together, or otherwise the cost of labor of just basically running your business. If you are an officer employee of your own S corporation, your reasonable compensation is a cost of goods sold as well. So you subtract that from gross revenue, you get gross profit, and then you subtract all the other expenses and you get net profit or net income. So one of the big things that affects net income is taxes. And though personal taxes are an individual expense, the money that you make with your business causes you to have more money. And the Internal Revenue Service wants their bite. So it is a tangible expense of your business. So for that reason, this week's is going to be short, and I'm going to share with you right now why. I'm very busy. We have estimated tax payment advisories coming up because the fourth and final estimated tax payment deadline is next Tuesday. We're getting a break. It's supposed to be on the 15th, but that happens to be Martin Luther King Jr.'s birthday. So because that is a national holiday, the IRS provides us that extra day. That's helpful for a lot of people. This fourth and final estimated tax payment basically ties everything up in a nice, neat ball. And unlike the other three, you should by now know what your net profit is for the year. I know it's the 10th, and some accounting firms or bookkeeping firms work at a different pace, but for us, we've basically had all of our financials done the first week of the year because we know that this is coming. So what we do is we basically take a look at the information from your entire year, get a pretty good ballpark estimate within couple $100 of how much we believe your tax is going to be, and then we advise you on how much that amount is, and strenuously suggest that you go ahead and pay it by January 16th. The reason for this is simple. You have a obligation, according to the IRS, to pay taxes as you go. As an employee, it's the easiest thing in the world. You just basically go to work, you get a paycheck, all the stuff that the government wants is already carved out of it for you by your employer. So no thought in that. As an employee or a self-employed person or a officer employee of a corporation, you need to do this yourself, and they only require you do it 4 times a year. But it's very easy to not do because nobody's standing over you making you do it. What the IRS does, and their method of getting your cooperation, is by beating you on the wallet if you don't, with interest and penalties. So there is an underpayment penalty if you're going to owe over $1,000 in tax come your filing time, be that February, March, April, whenever you choose to do it. The way to get rid of that underpayment penalty is make a really good payment next Tuesday. So that's really all I've got to talk about this week because that's what we're doing. And when I say that I'm doing these calculations, we have a number of clients for whom we're grateful have been with us for some time. And this is actually a service that we provide. We will take the profit and loss information as well as other things. The balance sheet certainly comes into play in some cases because there are other things in play. The money that you take out of your business, whether or not it's on your profit and loss statement, does have an effect on your tax sometimes. So, but we sit down and we do all the calculation for our clients and give them the suggested advisory. And for the most part, they make the payments. And then I've saved them probably several $100s come tax filing time. And I do not answer phone calls during lives. And also, there's the extra added benefit that you actually look forward to your tax filing because it's a measure of metrics more than a an event that causes a lot of stress and anxiety because you don't know how much you're going to owe, and if you owe a lot, where the money's going to come from. Sometimes it can wipe out your savings or even cause you, heaven forbid, to do an installment agreement and pay even more interest on your tax. We don't like that. So take a look at your P&Ls. Get an estimated tax payment in. There are online tools to help with these things if you're the do-it-yourself type. If you'd like help, reach out to us. We do answer questions during this call. It is a Q&A. Just type, in fact, let me open my chat thing. No questions yet, but we are on Facebook, LinkedIn, and YouTube simultaneously. And in any of those platforms, you have a place to make a comment. If you ever have a question during one of these calls, type it in. Don't be shy. I'll answer it live for you. If you have a question you'd like us to read the following week, type it in the comment of any post on any of our social media outlets, and we will save it and answer it for you the following week. If it's a answer that needs a question that needs an immediate answer, we will address it right away. So with that, the second week of the new year is well underway, and things are going well here, and we hope that they are for you also. So happy Wednesday, everybody. Have an amazing rest of your day, an awesome weekend. And if you have a chance, do something randomly kind for somebody. So until next week, and remember, by the time we do this next week, you have already made your estimated tax payments. Just do it. Save yourself the money. Never pay the IRS $1 more than they absolutely deserve. You know as well as I do, we don't like what they do with the money, right? So until next week, so long, and